Hello, Oracles. Oracle Tim here from Oracle Investments. Well, the SPY is falling, as is the NASDAQ, and the Dow is clinging on for dear life. So what happened today? We got our jobs report. Initially, the jobs report looked like we had a huge miss. Non-farm payroll employment rose by 199,000 jobs. The expectation was 450,000. Initially, the market cheered this because that could have been a signal saying the Fed does not need to raise rates yet. We can postpone those and delay them a little bit. So the market was like, yay, this is good. And then we got to unemployment, 3.9%. That is good for the jobs market, but that is another signal that the Fed will need to raise rates sooner. And now overall that wasn't, too bad. The market wasn't concerned about that. However, the bigger concern came later in the report. The average hourly wage increase was expected to go up 0.4%. It came in at 0.6%. So what does this mean? This means that less jobs were filled over the last month, but the people who are currently working are now getting paid more. This just shows that inflation is still there and is still a concern, which reiterates what we had all feared in the report earlier this week, which meant that the Fed is going to have to raise rates a little bit sooner. And now, while raising rates is going to put the market into a bit of a tizzy and a taper tantrum as we have seen this week, realistically, rates cannot stay at zero as low as they are. It's not healthy for the economy, it's not realistic, rates do need to go up eventually. And with these reports, is just showing that the rates are going to need to go up sooner. So we may see rates starting to go up, perhaps in March or April. The market, of course, is now taking all of this into account, and the first things that are going to take a hit when the rates go up are going to be the high growth stocks, which is why we saw the NASDAQ falling as fast as it did today. Also, we saw the bond yields go way up today. 1.77 was the mark that people were looking at. And we crossed that, and we did cross 1.8% today, so that was concerning for the market. And so be it, we came down afterwards, leveled off a little bit, but we still saw quite a bit of red. And so what does this mean for the market going forward? Well, for the next week and a half, it could still be a bit rocky. On Tuesday, Fed Powell is going to be having a hearing, and then on Wednesday, we are going to get our CPI data. So between those two things, some uncertainty about what's going on over the next week, and then once the CPI data comes out, may take a couple of days for the market to digest all the information coming out of it. We might see some volatility, some more over the next week and a half. So could we see some more red? Absolutely. Is this red something to be concerned about? Not necessarily. It could be a situation where the market is currently pricing in anticipation of rates going up in March. So if inflation numbers come in on Wednesday, right around where it's expected, the market could just be like, all right, well, we've already priced in rates going up in March or April. We're not going to be too concerned, and we will go ahead and start buying back in again. If it comes in a bit lower and inflation is lower than expected, that's an even better sign. And so this whole entire next week and a half, or until we get through this volatility, the good thing that you can do for yourself is pick yourself some of these stocks that you love long term. Something we have discussed before about the dollar cost averaging. And just dollar cost average your way into these stocks. You're playing them long term, like Tesla. I love Tesla. I love Apple. These are stocks where, you know what? Go ahead and play them long term, and you dollar cost average your way in. Nvidia is another one that I started adding to more frequently as well. And while we may hear some numbers getting thrown out there like, waiting for Tesla to get down to 900 or 950, or Nvidia getting down to around 250, these could be great prices. We do know that there is technically a gap to get filled in Tesla down to 939, but nobody knows for sure if that is actually going to happen or not. We might get some news from Tesla over the weekend that is shocking to us all, maybe Austin opening up or Berlin opening up. Or we might get next week when we get the news for when Tesla's earnings call is going to be. Could be some green that boosts the stock up. There's just so many things that are uncertain out there. I prefer to dollar cost average. Now I dollar cost average and I add more as the stock comes down. For those of you who follow me on here, you know my strategy for Tesla is I add to Tesla every single day, and then for every percent it drops, I add more. This actually has worked out very well for me for Tesla stock, and it works out so well for me that I think I'm going to actually adopt that with all of the other stocks that I have high conviction in, like the Apple and an Nvidia and Amazon. Because going into the environment that we're going into of uncertainty and the potential recession risks that we might go into as well, this is a great strategy to be in. So take a look at the stocks that you like long term. Think about worst case scenario. I like to do a strategy of plan for the worst and hope for the best. And for me, planning for the worst is making sure I have enough liquidity on hand to be able to buy these stocks as they are dipping, because we don't know how long the dip could be. And if I spend all of my money now, I won't have anything else. The dip keeps on dipping and my portfolio just keeps dropping and my dollar cost average does not come down as the market comes down. If I sell off some stocks for profit, or I take some of my losers that I don't think are going to do well in the long term and get rid of those to free up some cash, then I can slowly chip away as the market comes down and lower my dollar cost average. And I just keep all that cash on hand to keep on doing that. And then if the market comes back up, hey, guess what? My portfolio looks even greener because I dollar cost averaged my way back down. And what I love about this strategy for me is, as a trader who does still get his emotions tied up in the market and the swings that the market takes, by having this ability to have the cash on hand, when the market goes red, I can actually be excited because I can buy more for less. Buying more for less means I'll get a better return on my investment in the future. When the market goes green, I can just be excited. So either way, whether the market goes green or red, because I have prepared for it, I am excited either way. And with the market dipping significantly earlier in today, I did place some buys. So I bought quite a bit of Tesla today, which was nice because it dipped down all the way to 10.11 is where I bought my lowest shares at. I added a little bit to Nvidia, I added to SoFi, I added to Palantir, and I did put in buys for Square/Block and Affirm. And now most of those other plays, Palantir I'm playing long, SoFi I'm playing because supposedly they're going to be getting bought out soon, and I liked the price under $14, so I got in at $13.90. Affirm I'm playing into earnings, and Square I'm playing as a potential long-term play. So I'm waiting to see some news on that one, but I like the price where it's at right now. So I like it at 135. Affirm I've got my buy-in at 75. We shall see how those do. If Affirm does well in earnings and I get profitable on it, I will probably sell out of that one to free up some cash going forward. And I do put all of my trades on Twitter. You can follow me there at OracleTim1. So any trades that I make, I will post them there for you guys to see. Let me know in the comments below if you guys bought or sold anything today. I know many of you guys shared your buys on Twitter with me for Tesla. So great job. Some of you guys in at 10.10, some in at 10.20. 10.25. I think they are all outstanding prices. Again, if you're looking at these stocks long term, buying in times where it's red, just dollar cost averaging your way down is a great way to go. And for me, my cost basis on Tesla is around $800. So where I'm at now, it will be bringing my cost basis up. But I still think that Tesla at these prices are outstanding buys. So I am not too concerned about that. Thank you all so much for watching. If you have not subscribed, please do so down below. Sign yourself up for notifications. Again, I am on Twitter at OracleTim1. You can follow me there. I post all of my trades as well as any pertinent market or Tesla news that comes out. Otherwise, I will see you guys later. Have a great one.